Welcome back to Counting the Cost, your weekly business stop here on Al Jazeera. We look to Asia now, and a good example of how significant the region is in global business. We've got a British company, Prudential, run by an Ivorian, buying the Asian insurance business of the US insurer American International Group. That's AIG, which needed a $185 billion bailout from the US government last year. Now, that alone underpins what an important deal it is, because the US government's going to get some money back. $35 billion, actually, which is one of the biggest deals in the insurance sector. But it also allows Prudential to tap into a growing market as its domestic economy in Britain hits its maturity. What it also shows, and this goes back to my original point really, there's been a lot of movement in Asia as the big banks and institutions pump billions of dollars into the region. Europe's biggest bank, HSBC, moved its chief exec, Michael Gagan, from London to Hong Kong. Britain's Standard Chartered, which makes about 95% of its profits in Asia, plans to list its shares in India and China. And Goldman Sachs, it owns 4.9% of the International and Commercial Bank of China, which last year overtook JP Chase as the world's most valuable bank. It is worth a staggering $243 billion. That makes it larger than the economies of Hong Kong, Portugal and Colombia. Let's talk to Yvette Essen now. She's the head of market analysis at AM Best, an insurance ratings agency there in London. Thank you for joining us, Yvette. What can we make of this Prudential deal going after AIG's Asian business?
The way it's surprising is it's such a big deal, which is why the market has been a bit spooked by this deal and why the shares of Prudential have fallen within the first 2 days of them announcing the deal. And the shares have fallen quite significantly from surprise. However, at the same time, it's not a surprise because Prudential have obviously been very, very focused on Asia, and increasingly so. I've just published a report just a couple of days ago, and in that report we looked at Southeast Asia and the opportunities within Asia, saying that this was a great opportunity for growth.
The thing is, it's already got, Prudential I'm talking about, has already got a business in Asia. Is it just a good time to go after more acquisitions there? Is the market ripe for that there in Asia?
Well, the markets in particularly Southeast Asia, where I've focused my report on, are ripe for tremendous growth in some cases. The feeling is that Southeast Asia has got many driving factors behind growth. For example, it has extremely low insurance penetration currently, and there's a growing awareness of the benefits of having insurance, which are two of the reasons why Prudential has decided to look increasingly into this area and make such a large acquisition.
So we're talking huge untapped potential in Asia, you think?
Well, there's a feeling that Asia is one of the main points, one of the main places where people can still go and get growth, where companies can expand and move away from markets and diversify from mature markets such as America and the UK. There are other markets such as the Middle East, for example, where people see there will be quite a lot of growth. And that's an area I will touch in my next report, the Middle East being a potential for change and growth. But Asia in particular, considering the number of people living there, considering changing demographics, that's seen as an opportunity there, which is just invaluable really for companies such as Prudential.
Is it anything in particular in Asia that's driving the growth? Are people, is there new wealth to, you can buy your life insurance now, or is it material goods which people are wanting to insure more and more?
Well, each country has their own characteristics and specific characteristics which will drive growth. But say if we look at China, for example,
Sure.
There's growing wealth there with the economy. If we look at India as well, there's a lot of business infrastructure and internet usage there, so that and knowledge and expertise. So that's fueling the growing middle class. Then you look at the companies and the countries in Southeast Asia, and there's also growing wealth there, as well as understanding, awareness, and the understanding of the need to buy insurance products.
And on the flip side of this Prudential deal, I guess it's a great timing for AIG, who's got a little bit of money to pay back to the US government.
Yes, well, that's obviously one of the driving factors there. But it's worth pointing out that although it's a great opportunity, and other companies are looking at also penetrating this region, and that's resulting in a lot of competition in Southeast Asia and in India and China. So Prudential are going into this market. They've realised the potential there, but there are also going to be some challenges ahead in actually growing there.
Yvette Essen from AM Best there in London, thanks for joining us.
You're welcome.
And finally this week, Zimbabwe, an economic mess at the best of times, though, to be fair, gradually improving. But March the 1st marked an interesting deadline. It's one for companies in Zimbabwe to show how they intend to transfer 51% of ownership to black Zimbabweans. This is part of a new policy by President Robert Mugabe, and failure to comply could mean up to 5 years in prison. Haru Mutasa reports from Harare on another very controversial business move in a country which is unfortunately used to them.
Robert Mugabe's supporters want their president to fast-track what's called the indigenization process, under which companies will be legally obliged to transfer a majority of their shares into the hands of black Zimbabweans. It follows the takeover of white-owned farms, a controversial policy which is almost complete. Now officials say the next step is taking over business concerns.
We want to give our own citizens a chance to participate in the economic development of our country, period. So if anybody moves around coming with this silly argument that it's a ploy to line pockets of the president's friends, the president has a duty to empower the people of his country. He's in that office at the expense, and he must certainly see to it that the people of this country develop. That is his duty, simple and straightforward.
Companies worth more than $500,000 US have until mid-April to show how they're going to comply with the share transfer scheme. Those who don't could face up to 5 years in jail. It's a plan that's worrying both foreign and local investors. This is Zimbabwe's equivalent of Wall Street. The country's economy grew by almost 5% last year, the first growth in a decade. But investors fear that this indigenization law could jeopardize any future economic growth. Some critics fear the only ones who will benefit are the president's supporters.
I believe the indigenization concept, especially when they tie it to their so-called economic empowerment, is actually very misguided, and it will not lead to the empowerment of the masses. It will lead to maybe a temporary benefit for a few senior people who become the directors and the people who gain control over these companies. But the companies themselves will stop functioning very quickly, very much like the farms stopped functioning after they gained control over those.
Prime Minister Tsvangirai has called for a review of the plan to ease the fears of investors, but it seems he could be too late.
Trying to do things that are, in my mind, largely politically motivated, with a devil-may-care attitude to what effect it has on foreign investment, is irresponsible, because the people of this country are tired of it. They need to make money. They don't need to hear about, is it better to have 51% of $1 or 25% of $100? And do the arithmetic. It's very simple.
The split between Zimbabwe's president and prime minister raises more questions about who's actually running this country. It's a dispute that could end up destroying whatever business confidence that's left.
Plenty of business news and analysis online at aljazeera.net/English. Click on the business link from the front page. You'll find articles and video on demand there, as well as the business blog link where you can catch up with the musings of our correspondents around the world for the latest financial movements. It is all as ever at aljazeera.net/English. But that's it from Counting the Cost. I'm Kamal Santa Maria from the whole team. Thanks for joining us. We'll see you next time.